ladies and gentlemen. Good morning. It is June 17th, Saturday, 2023. All right, let's talk about it. You saw the opening picture. So, Faraday Future Intelligent Electric, ticker symbol FFIE. What the bleep? What happened yesterday? If you are an investor in this company, you would have been enjoying a great day. Like, we were up approaching the 45 cents range, actually flirted with 49 cents at one point, reaching these highs, over the past few months, and just continuing on with this multi-month progress, right? And you saw on Friday it was going great again, and so it looked like we were headed towards that 50 cent range, and then obviously we were setting our sights for the road to $1 and then some, right? So to $1 and beyond. However, right at about I can't pinpoint it, about 5:10 or 5:15, somewhere around there, just an hour after market close on a Friday, it was announced that Faraday Future would be offering shares. And they also announced a proposal to do a reverse split. And in another article, or some of them are intertwined in the same article, they announced that they're having a delay with their deliveries. So it's kind of like we got hit with counter punches right there. Right? We got hit with a combination of punches right there. Now, let's kind of break this down and what this means. What does a share offering mean? So a company like Faraday Future, which has had issues obtaining outside funding, they're looking at it kind of the way how we are as investors. They're making money on this stock going up as well, right? So this was definitely planned by them, not announced until it was done. So they saw an opportunity to take profit on their own stock. That way, they can obtain funding themselves, $300 million worth of funding to be exact. So that was what we saw. We saw a sell-off. And so I believe they may have done this strategically on a Friday at market close to further mitigate any further sell-off. Allow us to probably have the weekend to digest what's happening right now. So if FOMO is the fear of missing out and everybody's buying into a stock, well, this was the opposite of that, right? This was the fear of losing everything. You know what I'm saying? So anyway, I'm sure lots of retailers sold off as well yesterday. So we went from, at the peak of yesterday, somewhere close to 49 cents, and we ended in the after hours. We are now around 27 cents. So that's a huge drop, right? However, from the beginning of the market to after market hours, it comes out to about a 39% drop in one day. 39% drop is huge. It's bad for us as investors. It's not bad for Faraday Future as a company. So just to let you know, I'm not employed by them. I don't advocate for them, but they did this to secure themselves. They did this because they want to be able to have their own funding so that they can have a smoother transition going forward with their phases of production. All right? Now, that doesn't necessarily help us. It doesn't help us because we're trying to make money. We don't really care about any one of these companies individually in terms of long-term longevity. I mean, unless you're, a shareholder that wants to hold for like 5-10 years, and in that case, you don't have to worry about this. This is just temporary. This is a temporary bump in the road. But for us who are relatively swing traders, those who maybe hold it for months, maybe a year, maybe less than that, this is a This is an inconvenience for us. So anyway, that's the share offering, right? Then we have the reverse split. So if you know about splits in stocks, companies sometimes it'll be the other way. They'll split their stock in half or by 4 or 5 in order to make it cheaper so that they can have more investors. Tesla has done that. Amazon has done that multiple times. A lot of companies do that. Nvidia has done that and is back into the 400s again. They do that to make the stock more affordable for people. But in this case, we're talking about a reverse split. So Faraday Future is looking at their stock and they're saying, we're a company in the EV space, luxury EVs. We're trying to compete with the likes of Rolls-Royce, Faraday. We're trying to compete with Ferrari, Rolls-Royce, Maybach, those top brands, right? They want to compete with those, and they're now putting their vehicles out on the road, and they're saying to themselves, we still have a penny stock. This is not a good look. So what they're proposing is doing a reverse split, which means just the opposite of what would happen if you had $1,000 stock and you did a 2-to-1 split and it became 500. This is the opposite. So for instance, if our stock as a company is 50 cents a share and we want to do a 2-to-1 reverse split, it would now multiply by 2. So the stock price would go to $1, and the amount of shares that you have would be cut in half. Let's do easy math again on that. Say you have 100 shares and the price of the stock is $1, right? You have 100 shares and a company does a 2-to-1 split. The price of the stock will go to $2 and the number of shares that you will have will go from 100 to $50 because the value of the stock is higher, but you didn't make money on it. It just was a proportional change, okay? So they're proposing that. So we're in a sense now, and they are proposing anywhere from a 2-to-1 split to a 90-to-1 split. Why would they want to do this? Why would they want to make their stock so much more expensive than it is now? Well, think about it like this. Big money investors don't play the penny stock game. They don't. Most of them don't. If you want to attract big money investors, they are going to want to see a price that looks reputable. Looks like a company that's, established at least by price. I think it'll attract more investors. Now for us, that also sucks because I wanted to see a 20x. I wanted to see a 10x, 20x because I wanted to come from the cents and make it all the way into the dollars and to the tens of the dollars into the 20s, all of those stuff. That's what I was looking for Faraday. So a reverse split is likely, but again, it is not something that is set in stone. It is a proposal. It's going to be a vote by the shareholders to see if this is going to happen. Reverse split is not a nail in the coffin for investors. It is not a death sentence. It can be a good thing. The Faraday Future, the people who are in charge of that, the board, they definitely believe that it's something necessary for them to do for the company. Well, the most successful stock in the EV space from May to June was the stock Arrival, ARVL. If you look, they doubled their price after their reverse split. So after their reverse split, yeah, there was an initial sell-off because people were, they don't like to see reverse splits. A lot of them don't initially, but they recovered and they doubled their stock price within that month. So that can happen for Faraday, but I don't know what it's going to look like Monday morning. I don't know if people are going to think about this over the weekend and say, you know what, I'm out, or they're going to have time to kind of digest it and look at it differently. I don't know. As for me, when I initially saw it, I wanted to do a video immediately because I didn't but I didn't know all of the logistics. I didn't know what was going on. So I kind of just said, let me sleep. Let me read on it. Let me sleep on it and think about it. And then thirdly, they had an article, or they had another piece of news that they were delaying their deliveries, their second phase of deliveries, until around August, right? So now this goes hand in hand with their share offering, I believe. The reason why they're having delays is because they're having money issues. That's apparent. They're having money flow issues, right? And I guess also they're having a little bit of supply chain issues as well. But the money, getting the infusion of cash, will help mitigate a lot of these different things, a lot of these things. So that's why they did it. Terrible for us in the short term. Again, I said I'm riding with this stock. I'm going to ride with it. I'm not a financial advisor, never have been, never will be. But I will tell you this. Like I said before on the last video, what these kinds of stocks, what they represent is volatility. They're volatile by nature because they are not established yet. And when you're not established, you don't have that they don't have that foundation, that's firm foundation that other stocks would have. So I would just advise, being an unofficial advisor in this case, having a portfolio that is set up with a whole bunch of veterans, a whole bunch of very good companies, and these are going to be your stabilizing force, right? And inside of that, you can have a gamble play, which is a Faraday. This is a gamble play, right? I like to look at it like a team, like your portfolio is like a team. So all of the veteran stocks, all of the established ones are your starters. They're the ones who are holding down the organization. And then you can have a prospect coming up, a rookie, right? So Faraday is like the rookie, the prospect. Yes, Faraday's had some issues. They had a good run in college, but they had some injuries, right? So they have some setbacks, but we see the potential. I see the potential, so I stick with them. And they're on a good team. And if they fail, if they're not doing too well, the other teammates are picking them up. So guys, I hope you have a tremendous Saturday, and just, enjoy the sun out there wherever you are in the country today. Enjoy your day. Have a terrific Saturday. I will see you guys on the very next video.